And let's go straight to that big story, which is RBI's liquidity enhancement measures that were announced yesterday evening, much awaited. Latha is here, and Latha recently wrote an article as well, I think, over the weekend, sort of talking about exactly this issue. Latha, good morning.
Well, yes, this is absolutely liquidity floodgates when you look at it first, first sight. But let's look at line by line. To buy 60,000 crores of bonds in the open market, 3 dates, Jan 20th, Feb 13th and Feb 20th. Now, they're releasing money in slow, it's 20,000 crores that they're buying at each point in time. So that's a slow purchase and therefore release of money, positive for bonds and banks, of course. Then the 56-day repo is important, 50,000 crore. You know what's a repo? They take government securities as collateral and give money. 56 days later, the transaction is reversed. So for about 2 months, banks have the security that I have this money with me. Why? You can see it very clearly. It will tide over the March 15th advance tax outflows, etc. But why Feb 7th? That's the day of the policy. Now, if they do a VRR before that, banks will not apply because you don't know. You are applying it at 6.5% repo rate. And you're taking the money at that price. And then if the rate falls. So February 7th is crucially placed. Some people are taking it as a hint that maybe there is a rate cut. But really, the Reserve Bank has played it clever. The 5 billion of FX swaps for a 6-month tenor. Now, a FX swap it's a buy-sell. They buy dollars today and the sell is 6 months later. When you buy, you're obviously infusing liquidity. This is to neutralize a lot of short dollar positions the Reserve Bank has already taken because they're selling dollars. Those are short dollar positions. In the NDF market also, they have taken these positions which mature. So this kind of neutralizes that. That's why this is given. Now, the impact, total amount, if you count, 45 billion would be about 45,000 crores at today's dollar rate. And plus the remaining, it's about 1.5 lakh crore. If you calculate, most dealers were telling me that is Reserve Bank prepared for the 1.5 lakh crore of deficit that is still coming. So it kind of meets that number. Typically in Q4, there is also a lot of cash withdrawal. People like you and me and farmers who need cash, the cash withdrawal is high. So this replenishes that expected shortage as well. Now, what are the market's readings? The market's reading is that the Reserve Bank would be increasing the liquidity only so that their rate cut will be effective. In a tight liquidity situation, bankers will still be hankering after deposits, giving higher and higher rates. So a rate cut won't work. So if the Reserve Bank is giving liquidity, then on Feb 7, there is a likelihood of a rate cut. That's why they're preparing the situation. And maybe there is not a likelihood of a CRR cut. A lot of people believe the Reserve Bank is very comfortable with a 4% CRR. They want to use it only, like Lehman crisis or something very big. We're not in a crisis. Growth is good at 6.5%. So there is no need to do a CRR cut. That's the reading of the market at this point in time. Impact, well, immediately, of course, for bonds, it's good. One big buyer is coming and promising to buy 60,000 crore. So you should see a rally in bond prices and yields move ulta. So you will see the yields falling towards the 6.6% mark. And if you're expecting a rate cut, it can fall even further. At the moment, overnight rate is 6.5. 10-year at 6.6, it's a practically flat yield curve. So market will start pricing in that maybe there is a rate cut. Now, if there is a rate cut, then while banks are going to benefit because their bond prices are shooting up, there is a mark-to-market gain. A rate cut, as we all know, will mean that their external benchmark linked loans will fall. So there is actually a marginal crunch in the initially. So I'm not very sure whether banks will be very cheerful today. They have a positive and a negative. But NBFC stocks, other interest rate sensitives, I think they will be a little more advantaged.
Okay, so Latha, that means that the 7th of February becomes another red letter date. We have already marked.
It's very big.
Very, very important. And on the CRR and the crisis, my God, I hope I never live to see another Lehman, at least in my reporting career. That was another crazy error, right? So hopefully we don't ever get into that kind of a dire situation anytime in the near future.